Dear viewers, welcome to this episode of Expert Speaks. Today we are going to talk about the systematic investment plans, otherwise popularly known as SIPs. Everyone knows about SIPs, but there are a lot of questions that are there in the minds of the investor. How should I design my SIP portfolio? Which scheme I should be investing in? When should I start? How much money I should put in? Which way, if I design my investment strategy, will I get the highest return? Today, in this episode, I'm going to talk to the expert of the week, Mr. Chirag Patel, to get you the researched answers around the systematic investment plan, which is the one which is attracting you. This is NRI Money Clinic for you. And I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the systematic investment plan and what does the research show about the returns you get from SIPs and various aspects of investing through the SIPs, I have invited to this podcast my eminent faculty, Mr. Chirag Patel. Mr. Chirag Patel is the co-head of product and strategies with White Oak Capital. He has been working in White Oak Capital since 2021. He comes with a very rich experience of 16 years in the equity markets. He started his career with ICICI Prudential Asset Management Company. He is an engineer by profession, an MBA in finance, and a chartered financial analyst, CFA. Welcome to this podcast, Mr. Chirag Patel.
Thank you, Chandrakant, for inviting me on today's a very nice session and very popular concept called SIP. Delighted to be over here. Always be glad to see you on. We often see your videos on YouTube, which are very knowledge worthy, which are very share worthy. So happy to be here. Thank you for it.
Chirag, today I'm going to ask you the question which will lighten my burden. Every day I keep answering people their questions about SIPs. I have collated a lot of questions that these guys have in their mind, and I am asking you about 6-7 questions which are frequently asked by the community of investors and my audience about how they should design the systematic investment plan. My first question to you is, somebody has a doubt in his mind, when should I start my SIPs? I see the markets at lifetime highs. Is it good that I start now? Or let me wait for a market correction? The buzz going around is that the markets are likely to correct. Probably I'm better off if I start it a little bit later when the markets correct. You have done a lot of research around the systematic investment plan. What does your research say? Is it better for them to start it today or better for them to start when the markets correct?
So I think it is a very important question, and everyone want to know the very objective answer of this. So we have done a study for a 30-year period over Sensex TRI. So from 1996 we have done this study, and there are 9 big correction in this period, right? Which is more than 20%. So which are really a big correction, which can make difference to your life and difference to your decision making. So there are 9 big corrections which are more than 20%. And when we did the study, that if you are starting your SIP at the top of the market, just before the correction, and if you are starting your SIP at the bottom of the market, today, which SIP would have given you better absolute and XIRR? So the study says very surprising data that if you have started your SIP at the top of the market, then actually you have made more absolute return in terms of your wealth creation, because you have invested some higher number of installment because you are starting early as compared to if you are starting your SIP at the bottom of it. But at the same time, they also give you same or slightly higher XIR return in most of the cases. So, most of the time we think that, intuitive thinking is that if you start our SIP at the bottom of the market, then actually we end up creating more wealth. But study shows a very contradicting result, exactly opposite result. So what is the summary of the study is, there is a cost of delay, right? If you are starting an SIP at the top of the market and the market takes some 12 months to reach to the bottom. So those 12 installments, which has actually started just 20 years or 15 years before, actually are creating wealth also. And you are actually not able to generate wealth on those installments. So if you are doing a very long-term SIP, actually starting early is the, so whether it is the top of the market, whether it is the bottom of the market, after 10 years, after 15 years, all those levels will be lower than what is the 10-year level, level after 10. So I think ASAP once you start the SIP without looking at the level of the market, it is the cost of delay that matters and not the market levels over a longer period.
That's very interesting, but it becomes very difficult to conceptualize or believe that, okay, I start at the highest level of market and I stand to get a higher rate of return. Probably the answer lies, as you said, the more the money which is going into. At the same time, when you start your SIPs at the high end of the market, when the market's correct, then you are not timing, and every dip in the market works in favor of you. See, that could be one of the things. So the best thing is for somebody who wants to make most out of the SIPs is that don't worry about where the market is, what levels are, what televisions are telling, what experts are telling, what distributors are telling. Just go and start an SIP in the scheme where you have comfort with.
Exactly. So just to give you an example, a very numeric example, January 2008 was that time's market all-time high. And then market kept on correcting. The bottom formed on March 2009. So exactly after 13 months. Right, the market corrected by 60%. If somebody would have started his SIP on January 2008, his total investment amount is 19.2 lakhs. And if somebody would have started at the bottom of the market, that is after 13 months, which is March 2009, his total investment amount is 17.8 lakhs. Today, the market value of the SIP which has started at the top of the market is 64 lakhs, somewhere around. And those which has started at the bottom of the market is 54 lakhs. So there is a difference of 9.6 lakhs. Why? You have additionally invested only 1.4 lakhs because you started early. So 1.4 lakh is the investment that is higher than the SIP which has started at the bottom. But the difference in the wealth is 9.6 lakhs. So that is what the message we are trying to convey.
So it is crystal clear. Don't worry about the market cycle. Start early and let the market play its cycles. And you walk out with a higher amount of money. What percentages is immaterial, but you will definitely walk out with more money. Chirag, one doubt which is very, very common in the minds of people is, yes, I am fine with SIP. I will start. But the question is, every day there is a variation in the market. 2 days before we saw the carnage in the small cap. Then you see there was a bloodbath across the markets over there. So when the volatility or the prices move up and down, which type of SIP is better? A daily SIP, a weekly SIP, fortnightly SIP, monthly SIP, or a quarterly SIP? What does your research say? Which type of SIP gives a better rate of return for investors?
So this is also frequently asked questions. Say if I do a daily SIP, then I would be capturing more volatility than weekly or than monthly. So we have done that study also. So for example, if you are doing the same SIP on daily basis, or a weekly basis or a monthly basis for the same period of time, say from 1996 to till date, right? And your investment amount will be same. Final investment amount will be same. It make no difference to the SIP returns, right? So for example, I just wanted to give you some numbers. If somebody have done this a daily SIP, right, his XIRR return as on February end is 14.77%. Weekly 14.76%, and if it is monthly, 14.75%. So there is a difference after the second decimal, right? And which actually doesn't make any difference to the wealth, right? And that is what is the message we wanted to convey. So it doesn't make any difference. It's just add your number of transaction on your state. So yeah, in some shorter periods, so for 2-3 months period or for 6 month period, you can see some difference. But actually, it doesn't make any difference to your wealth. Whatever difference it will make in a short period of time, it doesn't make any difference to your overall wealth. When it starts making difference to your overall wealth, the difference is nothing, right? So that's why if you are doing a long-term SIP, it just add up to your number of transactions in your statement, nothing else. Either in your bank statement and also in your mutual fund account statement.
All that investors have to keep in mind here is that you consistently invest. The frequency doesn't really matter in this particular case. If you have started a daily, do daily or weekly or fortnightly, whatever it is, the difference between the returns you get from different frequencies is negligible and not worth it, except that it adds more entries in your passbook for your chartered accountants to make entries when he draws up your balance sheet. That's the only thing. One more question that comes to my mind is, my team, we write SIPs every day for our customers. We generally tell people, okay, we'll put a 20th as a standard date, so default date. How do we pick up? Very simple. Somebody gets a salary around 30th, 5th, whatever it is. Even if there is a salary delay or something like that, you have about a week or 2 days time before the money hits that account. So we keep it at 20th. But customers many times feel that, okay, 20th is not a good date. What if it were to be 5th? They say there is a expiry date which is coming on that day. There is volatility, will capture more. Then you have all kinds of horoscope guys. Then there are numerical guys. All sorts of dates people consider. Is there any evidence to suggest that a particular day in a month creates better return?
So I think there are lucky dates, there are birth dates, there are anniversary dates, that are all emotional things. And there are some, tactical thing also, whether I should start my SIP or keep my SIP date as near to the expiry date or near to the end of the month or at the beginning of the month or at the middle of the month. Will it create any difference to my life after 10 years, after 15 years? The answer is no, right? It doesn't create any difference to your life. Again, the difference comes after the second decimal point. So we have done the study from date 1 to date 28. So if you keep any of this date over this long horizon, right, there is no difference in your XIRR return or your SIP return. Right? But what I wanted to add over, if you are keeping 15 is your lucky number, and if it allows you to keep your SIP running for 10, 15 years, it gives you a emotional strength, then I think you should do at 15. If your salary is getting credited on first, then the best SIP date is second or a third. So the more logical argument is your SIP date, the best SIP date should be a second date or a third date after your income is getting credited in your account. That is the best check. And if there are some emotional biases, if you want to keep your anniversary date or your birthday date as an SIP date, and it allows you to continue your SIP for a longer period of time, you should go with it. That is what is my submission to this question.
I will fully agree with you, Chirag, on this, because if you keep SIP date very close to your salary date, the chances of you honoring the SIPs are very real. And you give 15 days gap from there, and if you spend the money, and your SIPs may also go up. So it's the best and the luckiest date is the date on which you get credits in your bank account, maybe 1 or 2 days within that, so that you will not inadvertently spend that money and lose that particular month's SIP. There is another problem with the investors. Investors start SIP in a right earnest, and for reasons known to them alone. Some people will stop SIPs because of cash constraints. Some people lose jobs. Some people, the salaries have not come or whatever. And some people will try to become more intelligent than the market. They say that the markets are not behaving the way they are expecting to behave. And they say, I'll stop the SIP now, and I'll start after 6 months or after 1 year, or if the markets reach a particular level. What effect it will have on this final outcome if somebody starts the SIP, takes a pause, and restarts it after a lapse of a certain period of time?
Again, so there is no different answer to this question than the first question that you asked, right? So it is again add to the cost of delay in your investments, right? So for example, if you are starting a 15-year SIP and you wanted to take such pauses where your installment will not get invested, and you always incur a cost of delay into those installments, right? Because if you are actually doing a 10, 15-year SIPs, then actually those short-term volatility doesn't make any difference. For example, I'll give you a simple example. In 2005, the Sensex was close to 5,000, and you are worried about that market will correct. And your judgment has gone right also. That market has reached to some 4,800 level after say 6-7 months in 2006. If you stop your SIP, you have not faced that correction, right? Your investment has not invested, and then you have started SIP at the bottom of the market. What will happen today? Today the Sensex is 72,000. So whether all those missed installment, you are actually losing the return because Sensex is now 14 times higher than that level, right? So all those installment which has been missed, whether you are smart for a short period of time, but over a longer period of time, you are not the smartest one. That is what is my answer. So don't try to do all those, gimmicks. The biggest gimmick that you can play in your SIP investment is discipline, is long-term invest. This is the best gimmick, and this is the most simplest gimmick to play. But in life, it is very difficult to be a simple, and it is very simple to be a difficult. And we try to do a lot of such difficult things, and we actually get lesser return than what we have potentially got.
Chirag, I fully echo your moves. I keep telling my clients, the stock market is one place where the common man wins. A man with average IQ will win than a man with extraordinary intelligence. The intelligence itself works against the persons in the stock market. And countless investors who have started, who have not even seen what their investments have done, they're not bothered about what television is telling, what an expert is telling, have come out victorious in the market. And You look at the history of last 5 years, 10 years, 15 years, 30 years, the story is the same. All that you have to do is give the discipline. Don't worry about these small things of date, frequency, scheme, and other things. Just keep doing your work, and the market will create a winner out of it. That goes without saying.
Just to add on what you have said, that so there are two common category of people who has created highest wealth by investing. These two category, one of them is one who has died and the other who has forgotten. These are the two category of people who has made highest wealth in investing, because there is no smartness. Their emotions were not there, right? So I completely, agree with what you have just shared.
People say stock market is something like a Chinese bamboo. It doesn't bloom every day. It takes a long time for it to reward. Sometimes it gives rewards from unknown circles, suddenly it spikes up. There are people who start SIPs. There are advisors, they do their own research, they start. But they see that the returns are not coming. Now, we have a daily market valuation. We have a valuation for every scheme, and every day there is a valuation. People invest, and they see there is no return. 1 year passes, they see that the returns are less than the back rate. 2 years passes, 3 years passes, 4 years. It has happened. In my own life, I have seen between 94 to 2003 or 2004, for 10 long years, markets didn't do anything. And it creates a fear in the mind or a self-doubt in the mind, whether I'm doing things right or not. For investors, let's take a hypothetical situation. If they see that the returns are not showing up over, let's say, 3-5 years, or it is a suboptimal return, what should the investors do? What message you have for them who sees SIPs are not giving them the desired results in the initial first 5 years? Have you done any research around that? What does your research say about?
Definitely, we have done this research also. So if somebody have done 10-year SIP, right, and we have taken a rolling period of this 10-year from 1996 till date. So if we break this 10-year period into two parts, first 5 year and the second 5 year. So there are periods when in first year 5 year SIP has done very good, and there are periods where first 5 years SIP may not have done that much good. So for example, we have taken very objective data. If those SIP which has delivered return less than 8%, so we generally consider it as a less than traditional instrument, so less than 8%, they end up giving higher return when they complete 10 year of their total period, rather than those SIP which has delivered higher than 8% return in initial 5 years. So actually the results are very different, right? So those SIP which have struggled in first 5 years have actually delivered higher return when they completed 10 years than those SIP which has actually delivered higher return in first 5 years. So I just give you one very nice example. It is quoted by Morgan Housel in one of his podcasts, that if you put two goldfish into two jars, right? One is with cold water and one is with slightly warm water. So cold water is a tough environment. Warm water is an easy environment. So both will grow to their adulthood, and when at adulthood, they put those two goldfish into same jar, both will go to their maximum level, right? But who live longer? Those goldfish which has actually been kept into colder water, actually they have lived longer by 30% than those which has been kept in the warm water or a good condition in the initial life. So actually those tough time actually helps it to grow its strength from inner side. So if the first 5 years were difficult, actually you are accumulating unit at the lower valuation, and then the next 5 years would be better than the last 5 years. You actually make more wealth on your accumulated unit because you end up accumulating more units during the tough time. So I think those SIP which are actually struggle for 5 years, should they end up delivering higher return when they complete 10 years. So long answer to your short question, but I think it is the very relevant question most of the time, because people give up after 5 years if the returns are not that much good.
So the message here is very clear. If you start with your SIPs and you see returns being suboptimal, or even for that matter negative, you shouldn't lose heart. It is perfectly normal. That's the way the markets behave. And actually, if you carefully analyze, what you're actually doing is you are acquiring units when the markets are not doing anything. When the markets perform, you'll start getting lesser number of units. It's safe to say, the longer the market remains low, the longer your SIP returns remain suboptimal. In the long run, it works in your favor and it creates a much better return than somebody who sees the return at regular intervals of time. It's absolutely certain. I fully concur with you. As I said, that I've seen 10 years in Indian market between 92, 93 to about 2003 for 10 long years market didn't do anything. But what happened between 2003 to 2007, markets compensated, rewarded all the waiting that you had to do with unimaginable rate of return in the following years. This also takes me to another problem the investors face, which is a problem of today. Now, today, you don't need an advisor, you don't need anyone. Everybody is gung-ho about investing in the stock market, and you put a SIP in any scheme and it will perform. It's a flood tide. Flood lifts everywhere. And suddenly people see I'm in the SIPs and my SIP book is showing return of 25%, 30%. Put any fancy number, it will happen because it's a short term and you are passing through a spike of it. But this creates an anchoring expectations in the minds of the investors. I started and I have seen this return and they will expect the returns to continue in the same fashion. Over longer periods of time, what happens to the return? Will it remain at the present level or how will the return shape up in the longer period for such lucky investors who came in and see a supernatural returns immediately?
Most of the time people think that, when the returns are very good, when the sky is blue, they start an SIP, they are looking at a very good, handsome return at that point of time. And in excitement, they start more and more SIP, right? That is what I have generally seen. And whenever there is a tough time, they get worried about and they can't continue all those SIPs. So do not get swayed away by, very high return because of that period power, right? If somebody has started an SIP in last year, their XIR return are very good, right? So what is the most important thing is you should start an SIP with an amount that you can continue for a longer period of time. Don't get swayed by, shorter period higher return and do not get disheartened by a shorter period lesser return. It is a feature of the market which can change the returns very fast in the shorter period of time. Sometimes you will see 22% CAGR return. Sometimes in a 1 month you can see 12% CAGR return. At 22% return, you should not cheer. At 12% return, you should not get disheartened. So initial 5 years, you will see a lot of such variations. Do not change your investment plan based on those short-term fluctuation because as you rightly mentioned, it is having a lot of anchoring bias. The starting point makes a lot of difference. It is just like raising a baby. Initial 5 years would be very difficult because he or she can't speak, he or she can't explain your problem. And you have to rush to the doctor many a time. But after 5 years, you start enjoying the baby. So first 5 years are very crucial. It is just like raising a baby. It is just like parenting. So do not take your decision based on those short time return fluctuation. Be cool, be calm and stick to your goal. It is better to have a longer SIPs rather than to have a higher amount of SIP for a shorter period. Right? So that is what is my message.
Now, a rational investor is asking you, he's not worried about what returns he gets in kind. But his only thing is, I should not lose one and it should serve me. Tell me the period for which I should be doing my SIP. How long should the SIP be ideally? And at what points of time I can be reasonably certain that I'll not get a negative return or I'll get a return which is less than my opportunity cost, which is my bank FD. How long the investor has to continue the SIPs to be absolutely certain that the negative returns or suboptimal returns are the ones what he gets?
So basically during this entire conversation, many a time I use 10 to 15 year SIP and that number is really not random, right? We have actually done study that somebody may start a 10-year SIP, somebody may start a 5-year SIP, somebody may do an 8-year or 10-year or 15-year or 20-year. And what is the definition of long term, right? That is what is always a question which has been asked by Rational. So if somebody may have a 3-year SIP on a rolling basis, after completion of 3 years, 84% time you would have got positive return. So it means that 16% time you would have got a negative return. So the chances of delivering negative return for a 3-year SIP 16%. If somebody is doing the same SIP for 5 years, right, getting a negative return, probability of negative return after 5 years is 9%. But if somebody is doing it for 8 years, the probability of getting negative return is 0%. And if you extend your horizon for 10 year and beyond 10 year, then getting return more than 10%, the probability further improves, and which is 90%. So after 8 years, probability of negative return is 0%. after 10 years, the probability of getting return less than 8% is only 1%. So I think 8 year is the minimum period one should have is SIP. That is just based on past data. And 10 years, 15 years are actually, you can decently beat the traditional instrument. And that is the minimum return I'm talking about, not the maximum. I think 8 year is the bare minimum SIP period. Higher the period, higher the probability of getting higher returns.
Which only means to say one thing. What investors can do to avoid the negative returns or to get a better return is simply lengthen the duration of your SIP. Keep a longer time horizon. How much long? The longer the better. There is no crystal clear answer about 3 years, 5 years, 8 years. The longer it is a better. If you have a long-term life goals like your retirement or you want to construct a house 15 years later, all these things will fit in very well in designing your SIP. When you start your SIPs, be prepared for volatility, be prepared for a supernatural return in the initial phase, be prepared for a suboptimal return. All in the game, it can all happen, but over the longer period of time. Needless to say, going by the past experience in India or elsewhere in the world, it is very, very safe to say you will get an inflation beating return. There's no point in commenting on any specific number of return that one can get. But it is safe to say you will get an inflation beating return in the long term. Mr. Chirag, I'll wind up this podcast with one last question that is there in my mind. It's a human behavior. People think I've got very small amount of money. I can't start an SIP today. 6 months down the line, I'll complete one EMI. My personal loan gets closed. I'll go for a promotion. I'll get some bonus. I'll start my SIP 6 months, 1 year down the line with a higher amount of money. If this is the question that is there in the mind of the investor, how would you like to answer this question? Start with whatever you have today or wait for an opportune moment, start it with a higher amount, which works in favor of the investors?
What I have learned in my life, you can never have 100% clarity. And if everything is 100% clear to you and you are going to be right as per your thought, then you are the God. And no one of us is a God, right? So only God knows everything in advance. So uncertainty always remains in life. You start with smaller amount. If you are uncertain about your, the career or about your economical condition, you start with the smaller. But there is an option in mutual fund. You can raise your amount automatically, say after 1 year. So for example, if somebody is starting 10,000 rupees or a 5,000 rupees SIP today, he can raise his amount by 1,000 rupees or by 2,000 rupees every year. So for example, if somebody has chosen 10,000 rupees SIP and every year he wanted to raise the amount by 2,000 rupees. So from next year onwards, your SIP installment will become 12,000 rupees. And the third year, it will become 14,000. And you can cap this amount after 10 years. So after once it's reached to say 25,000 rupees, I don't want to raise the amount. You can put a cap also. So the best thing that one can do for this kind of problem or this kind of situation is do a top-up SIP. Mostly young people should do it. So for example, when you are young, your salary is not be that much higher, right? Your salary is slightly because it is an entry-level salary. So you'll start with a smaller amount SIP. There is no problem of starting an SIP of 1,000 rupees also. But you should start. You should get into the process, right? So your learning will be very fast because nobody can, learn by reading a book. Nobody can learn swimming by reading a book. You have to get into the swimming. So get into the swimming pool first. Start 1,000 rupees SIP because in initial career, your salary rises faster as compared to later part of the career. When your salary increases faster, the increases our consumption faster and not our investment. So if a young people put a top up, the moment he get an increment, his SIP will also get increases and he actually end up investing more and most importantly, his journey starts earlier and early start is actually always a better start. And after some time, you can anyway put a cap on your top up SIP. So after this amount, my SIP top up should not be there. It should be normal SIP. So that is what is the best feature somebody can use for himself and should start it. So that is what is my message.
Investors start SIPs with an intention to get ahead. They do all kinds of stuff, trying to focus on things which can't be controlled. They try to do it with daily SIP, altering the frequency, timing the market, trying to find a scheme which shows a higher rate of return. All these things, let us understand one thing. how much of return markets give, only the market, no expert, no distributor, no fund manager, no governor of Reserve Bank can predict what is the rate of return that you get. And none of these things which we discussed in the date, the frequency, timing, market up move, market downward movements will dictate what rate of return you're going to get. But if you are particular about getting the good rate of return from SIPs, there are things which you can control. The thing is, start early. Start with as much amount as you can. Give it the longer time. How long? As long as you can. More time, more money, quick starting of your SIPs are the ones which will never ever let you down. You can be right from day one that you are going to get a handsome return from the market. That's what you need to control. Do not waste your time researching around the rest of the things that has no utility for you whatsoever. Thank you, Chirag, for bringing all these research opinions for the benefit of my audience. Very sure my audience is enriched with these beautiful points which have come out of your research. I remain in gratitude to you along with my audience to share these thoughts for the benefit of investor communities. My gratitude goes to you and your organization. Come forward and share these details. Thank you very much, sir.
Thank you, sir, for inviting me. It's a pleasure to be here as always. So thank you very much.
Dear viewers, hope the episode that I have done today helped you to understand all the complexities that could be there in your mind in your endeavor to hit success in your systematic investment plan. If you are somebody who is looking out to start your systematic investment plan, build your portfolios, and you need professional assistance to handhold you, you can make best use of the services provided by NRI Money Clinic. We have a team of experts on the ground. You can reach out to us through a WhatsApp message. Our number is in the description box. We have also provided a link there. Click on the link. It takes you to the WhatsApp. Send us that message now, and our team of experts are ever ready to help you. Why delay? Send that message. Dear investors, hope the video that I have done today helped you to understand all the final points of SIPs. If it did, not forget to give me a thumbs up. And if you are a person who is watching my channel for the first time, or if you are yet to subscribe for the channel, please hit that subscribe button right now and press the bell icon. Do not forget to share these videos with your near and dear one, friends and relatives, and on all the WhatsApp group on which you are connected with. Thank you very much for spending your time watching this episode on NRI Money Clinic. I shall be back with you with yet another useful topic, with yet another expert next Tuesday. Till then, stay safe. Jai Hind, Jai Bharat.
Press the bell icon for more details and subscribe our channel.